Alright, we back once again with another one, part 6, following up with the readings on the Tesla gamma exposure charts. If you're new here or if you haven't watched these videos, go back and check the other ones. But basically it's playing out like the charts are saying for the most part. What I like about using this type of strategy is it really gives you an idea of where the magnetic levels are. Start thinking of them as like a gravitational pull towards the big exposure levels. And so we're going to go through and see how this played out. This was the chart of Tesla going into the day. We were basically looking at this chart here, and we'd set the chart up so that we have a trigger. A trigger is where the volatility triggers, where that market maker starts to go with the market. If the stock is falling, the market maker is going to continue shorting the dealer. Thus the other person on the other side of your trade. And if it's above the volatility trigger, you're going to get a little bit more of a steady up climb in general. So you're going to see the market maker doing the opposite of what it's doing. It's going to be buying dips and selling rips. But that kind of lowers the volatility and allows the stock to climb a little bit because there's that underlying support on the dips. So in this market here, this is the chart we were looking at before. Here's how it's progressed. So here's when I first started looking at this for this series for the most part. You can see the call gamma exposure up here. Here's the put gamma exposure. This is basically going to be the expiry on Friday, what we were looking for, obviously March 11th. And we're looking at all the gamma exposure levels here. You see the coloring gives you the gamma exposure levels. So 900 being one. 900 was one we were looking at the early part of the week just because that one was significant. It was kind of smaller. Obviously the 800 is kind of a bigger magnet, so that day it was kind of pulled more towards that level. But then it flipped. So we saw kind of a big jump in gamma exposure for the next couple days here on the 900. A lot of extra exposure here, which these sort of act like magnetic levels, but there are also support resistance. So you can't look at them as you basically the stock is going to have to kind of grind its way through these levels. Is there enough momentum for the dealers to essentially hedge away their gamma exposure through these levels? Well, that basically has remained to be seen for the next day. But in this case, you had so much gamma exposure here that I was highly confident that, not to mention we had the situation where the volatility trigger was dropped the next day. It was dropped to 825. So opening up where the close was, if Tesla were to open up 825 the next day, then I would honestly just right away just be thinking calls, just because you had such a big level put in right there over the overnight essentially. So, and you had a bunch of exposure here. So I would at least think Tesla would try to make a run into this little area here, just because there was that flip overnight. So then we moved to this day. Then we still had tons of gamma exposure. Tesla did run. Look where Tesla ran, basically 860 right here, right under all that gamma, being pulled towards the 900. Again, we had even more put into the 900, but we also had a huge increase here in this zone, which I think what happens there is you had such an imbalance, and this kind of in my mind it looks like a FOMO type of situation where you just had such an imbalance here, where basically all the put exposure was just dwarfed by all the call exposure, and you can see the difference there, where it's just like all the exposure just went straight to the upside. And that sort of just tells me it's like an overcrowded trade in a way. Like, yeah, Tesla can move higher, but is it really going to be able to grind its way through all this gamma exposure to reach that 900? It did not, in my mind, it did not look like that was going to happen coming into the next day, especially if it opened up here. And I would have to see where that volatility trigger was too. This volatility trigger can change based on the open interest. I would run this chart if you guys use this chart. Run it at night and run it again about 6:30 in the morning to see if any of these levels change, because that is a possibility. So anyways, okay, so that was running. I ran that on the 9th. What happened on the 9th? Let's see here. Here's the 9th. So you had a situation where it did run to that 860. That was right in here, so it closed right there, right on that level. And that was from our previous day. We were looking at the previous day where it closed about 825, saying, hey, if it opened above the close, there's a really good chance it could run, but there was a lot of gamma exposure there. So, and these levels are the current levels for Monday, for next week, but they're still going to act as support and resistance because there's still some residual exposures there. So that's kind of what we're looking at. Now, same thing here. This is the next day where we had the basically overcrowding here, in my opinion, and then kind of the underexposure to the downside. That balanced out, and the stock basically closed in between the range. So that makes sense to me as well, given that market makers were a little bit basically it got overcrowded here, and so the market makers, and everybody essentially, just the market in general, corrected that to the downside, got pulled more towards the balanced zone here. Volatility trigger was moved to 845. So as all that gamma exposure got basically got hedged away, is the way I think of it, the stock had to naturally trend downwards, creating more exposure to the downside. Boom, you had a lot more build up there. You had a huge build up there in the 800s, similar to what we saw where we had this explosion in the 900s. And then we still had that same resistance above, still had that exposure. And then we had this right here. That one was interesting, where we had that 850 kind of grow a little bit. And so we had a huge node here at 900, 850 got a lot more exposure. So in my mind, I thought there's no way this stock is going higher here, especially if it opens where it is, just because they walloped the 800 essentially. So you're looking at a situation where, like, if this is below 845, I'm looking for that. I'm basically looking short, thinking that if the market's bad, this is going right to 800. And so that was my thought on the 10th, which would have been right here, and we closed here. So we had the correction, and then we had the close right around that volatility trigger. And here's where they did a little bit of a rug pull, kind of a bull trap, just because of the rip at the end of the day. And so that exposure here, reading this situation like this, where you had the correction in gamma happen, and then you had the extreme exposure built up on the 800s, and then you just kind of had a level here between 820, 825 with some exposure. If the market was bad, I figured we would probably drop pretty significantly, and that's exactly what happened. We came right above that trigger, and then as soon as the market got bad, as soon as this got under that 840, it was basically a beeline to the 800, where it just sat all day. You could see it just kind of chilled on the 800 all day, and that's because that was just, they were hedging that exposure right there all day long. And the market wasn't that bad. I mean, it did take a dive at the end of the day, but looking at the implied volatilities on all the stocks at the monies, it was really low. There wasn't a huge fear of any kind of crash or anything. It just seemed pretty orderly sell-off. So it wasn't. VIX was relatively tame. It did have a little bit of a spike at the end of the day, but it was relatively tame. So it wasn't a huge scare here, especially sitting here at 800. This is something I learned. There just wasn't enough exposure here to be able to break that level. So hopefully this is making sense. Now we're looking into the new day, and I haven't looked at this yet, so you guys are going to get kind of like a live look at how I think about this. But we had that volatility trigger. Looks like it's now 825 again. All right, so this is what we're going to do. We're going to set this at 825. So that's our volatility trigger. I like to take the top two gamma levels. At least with Tesla, this is how I've been doing it. I want to at least filter out, like, what are the two most important levels for Friday. So this is going to be for basically quad witching day. So we're going to keep a really close eye on this over the course of the week, so that we can have a really good idea of, we're going to go into FOMC. We're going to have, the quad witch on Friday. There's going to be a lot of gamma exposure movement here. There's going to be a lot of shifting and things like that. So if we keep track of it, we'll have a really good idea of what's going to happen Thursday and Friday, and really take advantage of it. But again, we're seeing a situation now, I think, where there was kind of like a shift FOMO downwards here, similar to what we saw on this day where we had the shift to the upside, where all that exposure to the downside was kind of cleaned up and then they just kind of overcrowded the upside. Now we're sitting balanced, and then we got imbalanced again. So now we're sitting a bunch of exposure to the downside. But we have a huge level here again, still at 800. Still a ton of gamma here, sitting here for Friday. Huge gamma here on 750. So definitely want to keep an eye on that. But you have a bunch of gamma here to kind of mess around with in between the 800 and 850. So 780. So you got a situation where we've got this little zone here. But what I'll do is I'll just go here. We got this level here, and then we got 750. We're just going to start building the picture out here. Okay. And we have a couple bigger levels up here. We kind of have a zone here, 860, 865. But the biggest one here is 900 again. So we're gonna leave that there. We'll leave this up here at 900. I don't want too many levels here. I just want the biggest ones for now. But we got 750, and we have a pretty sizable one here at 700. But I'm going to leave it alone just because right now we're here. So there's no real reason to be thinking, to be charting 700 when we got to worry about this zone here. So you guys can see there's a lot of gamma in here. I would imagine a test of 780 most likely is going to happen. Whether or not they can break 780 like on Monday, I doubt, unless we just have a crater day. But I would imagine 780 gets tapped, and if 780 breaks, there's a lot. It's going to be a grind essentially into that 750. I don't think there's going to be any kind of crash there. But under 750, there's not nearly as much gamma here to kind of hold it up. But it should essentially be sort of a sell the rip type of Tesla, is what I'm thinking. Like. If I see Tesla trying to move higher, like you could set some support and resistance here. If I see Tesla trying to move into 800 or trying to move into like 811, anything above here is going to be looking bull trappy to me. Anything above 800 until it can close or get above this 825 and we see some gamma start building up here again, I would not be thinking upside. Me personally, this is just my thinking. I would be thinking this is going to be continually drawn down into these big gamma levels because that's just where all the exposure is. They got to hedge that exposure out. And I might be thinking of that wrong, but that's just my thoughts there. So for Tesla, at least for next week, sell the rip is where it's at as long as you're underneath this volatility trigger and as long as you've got the big gamma levels to support your thesis. Think of them as a gravitational pull towards these levels until it gets overbalanced. So if you're looking at it, once I see maybe these levels kind of clear out a little bit and these levels grow a little bit more, I would think that would likely be the bottom. But as of now, it looks like a sell the rip type of situation. Probably 780, probably 750 gets tagged next week. There could be some sort of liquidation to 700. That would be a buy the dip scenario for me. Just for long term, but even 750. So anyways, hopefully you like this, subscribe, and we'll see you next week. I'm out for the first half of the week, so we'll have another video on Thursday. Peace.